But IDBI Bank is in focus right now. Would like to talk about the fundraising activities with LIC, the FMPSU bank meet that happened just yesterday, and of course the credit boost during the festive season, which is upcoming along with the PCA framework. So let's welcome on board Rakesh Sharma, the MD and CEO at IDBI Bank, joining in. Rakesh, hi, morning. Good to have you on the show. Wanted to understand how much of a limiting factor is the PCA framework to IDBI Bank's growth right now?
Yeah, I'll reply in this way.
Sure.
That PCA, of course, there are a lot of restrictions are there. We cannot grow in credit, and especially in our case, we could give loans only up to 5 crores, that to individuals. So there were restrictions were there, but there is a reason for that. Why we were put under PCA, because the NPAs were high, and there was shortage of capital. So that way, during this PCA period, I think we have been able to set our house in order, and that way, the risk weighted assets to total assets, that we have improved a lot. Provisioning we have made. So now, having set the house in order, improved the policies, underwriting practices, and all follow-up practices. So I think now we are set. We'll set to come out of PCA, and then I think we'll be able to do business in a much better way.
Post the infusion of 9,300 crore rupees that we saw, where exactly would your capital adequacy ratio, the NPA, stand at permissible levels? Will the loss really turn around? And do you really think the focus of this capital, would it be growth or would it be for preservation?
Now, this we have to again look this way. Our capital adequacy as on 30th June was 8.14. So we were short of that, regulatory guidelines, and we have certain aging provisions to come during the next quarter. So that way, this capital will help us in meeting the regulatory requirements. Number one. Number two, the NPA provisioning, so that aging requirement will be taken care of. And if in December, when I was presenting the results for in November, September, that I had given a roadmap that our the net NPA, how we will go in the net NPA level. By 31st March it will be below 9%. 31st December I had said that we will be below 12%, and by 30th September we should strive to be below 6%. And I am happy to tell you that we are going in the same track. I think hopefully by 30th September we will be able to reduce our NPA by below 6%, and that is mainly due to higher provisioning. You see, 30th June our PCR was 88%, which is quite good. So taking care into all these requirements, this capital will help us that by 31st March we will be above all regulatory requirements. And of course, for growth, we will raise certain either tier 2, because there is a lot of scope is there, and partly it will take care of growth also.
Okay, so that given that the ROA then is not up to the mark, do you think the RBI will allow IDBI to exit from the PCA? Have they made any such exemptions earlier? And is this an option perhaps that other PSBs could look at as well?
Like in the past also, if some banks, they have complied with the net NPA norms and the capital adequacy norms, the RBI has taken them out of PCA. So in any case, as I said again in December, that hopefully by this year end we will be in profit also. Maybe for full year we may not be in profit, but for the quarter, maybe Q3 and Q4. So one of these quarters, preferably, hopefully we'll be in Q3 itself, we should be in black. But so the net NPA requirement will be taken care of, capital adequacy requirement will be taken care of, leverage requirement should be taken care of. So with this profit, we hope, and we will request RBI that they should bring us out of PCA, so that we can do our normal business. So of course, as I said, we have set the house in order, but at the same time, being under PCA, it affects our operating profit. We are not able to lend more. So this coming out of PCA will certainly help us to grow in our business and improve the profitability part.
Okay, what are the bank's plans for festive season? You know, we've heard of huge rollouts from some banks to trigger spending. The timing also strategically placed before Diwali. What's your take?
Yeah, in fact, if you see the trend of improvement in retail loans, it is it picks up from Q3. Actually, once the festive season comes up, even on 30th June, I'll just give you the data. Although YOY we have grown by 19%, but on March the growth was only 2%. So if you analyze, it becomes 8. But it does not happen like that. So we'll have to grow by 19 to 20%. So during festive season, yes. Every year we have been coming out with various offers. It can be in the form of waiving processing charges, and now in any case RBI has asked us to link the interest rates from 1st October for all retail and MSME loans to repo link. So that also we are working out. So various concessions can be announced for the customers. So that we will be able to pick up and grow in retail loans. In any case, YOY, as I said, we are growing by 19%, and that is our target also.
How critical would you say is the credit boost from banks to stimulating overall economic activity as well as job growth? As repo-linked loans are mandated from October 1st on home loans, auto loans, how is it that will impact your bank's financials?
Now we have to see in this way, this linking the interest rates to repo rates or other action. It's not necessarily that repo rate only, but external benchmarking is required to be done. RBI has given 4 options. So now linking that will certainly help the customers to take advantage of the reducing interest scenario. But sometimes, of course, suppose because it's all various cycles are there. Once if the interest rates start increasing, then we'll have to see, because it may harm the customers also. Second thing, that's why we are examining all the possibilities how to link it, because if we link the advances to the repo rate and there is reduction, so certainly it affects our margins, because liabilities, unless we link the liabilities also, or we make some provisions that the liabilities the interest cost also should reduce correspondingly. So that's why we are working on this. Like otherwise there will be interest rate risk scenario will be there. So all this will work out. But of course, yes, in this falling rate scenario, linking to external benchmark will certainly help the customers in taking advantage of the reducing interest rates.
All right. Thanks so much for joining us this morning and taking us through the latest, Mr. Sharma. Good chatting with you.
Thank you.